we're 100% bullish on gold. Cryptocurrencies has its weaknesses. It doesn't, and now nobody talks about the weaknesses. The thing is invented. It's an invented thing. Gold is real. It's been around for, since the beginning of recorded history. And it's not going to go away. And the central banks are going to keep buying it. Inflation's going to keep rising. And again, the deeper the dollar falls, the higher gold prices are going to go. And again, that's the other thing you have to look at about all these countries that are disgusted with America's economic and geopolitical hegemony. The BRICS are real.
Against gold, for example, the dollar's purchasing power has fallen by 99% since 1972. If these imbalances grow and erode faith in the dollar's future value, its status could be jeopardized. As BRICS expands, discussions on reducing dollar reliance have centered on gold as a secure, inflation-proof asset. BRICS nations hold over 20% of global gold reserves, fueling speculation of a gold-backed currency to rival the US dollar. Gerald Celente is a prominent American trend forecaster best known for his predictions on global financial markets, economic trends, and events. In this video, Celente predicts that the US will lower interest rates to prevent a strong dollar from harming global currencies, potentially boosting gold prices. This week, the Federal Reserve made its third consecutive interest rate cut of 2024, lowering the federal funds rate by 25 basis points and leaving the target range at 4.25% to 4.50%. Following the Federal Reserve's interest rate decision, a significant profit-taking activity is anticipated within the precious metals market, specifically for gold and silver. Based on economic trends, Celente highlights gold's strong 2024 performance, driven by central bank purchases. However, he argues that cryptocurrencies have suppressed gold prices, which could be double without their influence, and dismisses proposals like selling U.S. gold reserves for Bitcoin as absurd. According to the World Gold Council, central banks bought a record 483 tons of gold in the first half of 2024, driving the asset to an all-time high, marking the largest accumulation in over 55 years. This shift is reshaping global reserve management as gold gradually replaces the US dollar, traditionally the primary safe haven during periods of financial uncertainty. Regarding the market potential, Gerald Celente emphasizes gold's historical reliability as a store of value, contrasting it with speculative cryptocurrencies. Now we present the clips of Gerald Celente's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
On one end, again, Trump is going to do everything he can to pump the economy up. He's a bottom line guy. And that's why we're saying we believe that even though they're saying that inflation's higher than anticipated, that and the Fed's going to be lowering interest rates, that they're going to slow down the interest rate. He's going to do everything he can to pump the economy up. Again, like him, hate him, it's going to do everything he can. Look at his track record. As I mentioned, what happened back in 2018 in December. He's going to do everything now. So again, Canada just lowered the Bank of Canada lowered them, 50 basis points? It's a freak show. What I'm saying is they're all lowering interest rates. It's one big club. The United States is not going to keep interest rates high because all these look what's going on with the loonie and the euro. They're all going down. Everything's going down. So the United States is going to lower interest rates, we forecast, because they can't keep them high because the dollar will be too strong and these other economies will suffer because they're low. Their currency's going down. Inflation will kill them. So the lower interest rates go in the United States, the higher gold prices go. That's the way we see it. So right now, gold is on, gold, again, one of our top trends for 2024 was a golden year for gold.
Yes.
Gold prices have gone up over $600 an ounce since then. They were flying high until Trump came in. And again, this is why if somebody calls me a futurist, I said, nobody could predict the future. There are too many wild cards.
Yeah.
Let's go back to the Trump again. Go back to when he wasn't president and how much he couldn't stand Bitcoin and cryptocurrencies and sort of fraud they were. Oh, then he got how much money? What, a couple of $100 million in the crypto club, and now he's pro crypto. And what is Bitcoin now? Like $107,000 a coin. It went up over 40% since he came into office. That brought gold down. If there were no cryptocurrencies, gold prices would be at least double what they are now. Again, if Bitcoin, again, its thing wasn't invented like 2009 or something like that. I mean, again, it's not what you want, what you wish for, what you like. It's what is.
Mhm.
And now with Trump behind this and the people that he's bringing into his government, very pro crypto, we see this thing keep booming. And again,
Yeah.
we've been right about it. In the magazine, the Trends Journal, each week we've been very bullish on it, and we're saying it's going to continue to grow because of the people he has into office.
But what do you do? Do you buy it at like $106,000?
Again, they're the other cryptos that you're going to start coming in and playing the game. It's a gambling game. If that wasn't there, you would see gold prices at least, I believe, double what they are now. If you didn't have all these cryptocurrencies. And again, countries like El Salvador going, crypto. It's real. It's not fake.
In 2024, the world witnessed further transformation and instability, marked by protracted and intensified geopolitical conflicts, repeated attempts to decouple and sever supply chains, and the rapid rise of the global south. It has become all the more clear where the once-in-a-century transformations are heading. According to Gerald Celente, globalization is responsible for the decline of American manufacturing and the erosion of the middle class. He emphasizes the need for self-sufficiency and the revival of local industries to restore economic stability. Concurrently, Celente contrasts this with countries like Russia and China, which he believes thrive due to their self-reliance. The United States is concerned by China's alignment with Russia as Moscow continues its invasion of Ukraine, the U.S. State Department said on December 30th after Russian President Vladimir Putin and Chinese President Xi Jinping held a video meeting. Beijing claims to be neutral, but its behavior makes clear it is still investing in close ties to Russia, a State Department spokesperson said, adding that Washington was monitoring Beijing's activity closely. Let's get back to the interview.
Again, I read McKinley, the former president. He said, what do you want? Do you want cheap products or do you want high wages? Tariffs. He was pro-tariffs. We used to have, once upon a time, well, I'm up here in Kingston, Gann shirt factories. Oh, factories everywhere. Oh, a thing called the Rust Belts now. We used to have a middle class because there was manufacturing in America. You can't make any dough working in these chain stores. Go to any Marshalls, go to any Target, go to anyone. Every time you go in, before you go in the door, there's a sign up, help wanted, full-time or part-time. You see them everywhere. That's, by the way, why they wanted all the cheap labor coming and all the immigrants. Because the people you can't make any money working in these places. When we had manufacturing, we had a middle class. And again, only one of our top trends a couple of years ago was that the countries that are going to be the most profitable are the ones that are most self-sustaining and self-sufficient. When the Ukraine war began and the United States and the West started putting sanctions all on Russia, and Biden came out and said, we're going to punish Putin. We said, no, that's not going to happen. All those companies that are leaving Russia, the Russian people are going to take over those countries. And Russia has not all, but all of the human and natural resources they need to be self-sustaining. The same thing with China, self-sustaining and self-sufficient. Same thing with America. We have the human and natural resources. Oh, again, I grew up during the Vietnam War. I'm the same age as Trump. Those dirty commies, if we don't stop them, they're going to take over all of Asia. The dominoes are going to keep falling. Oh, the commies are still running Vietnam, right? They're our second largest importer of clothes and shoes. Oh, the country that we killed over 3 million people and about 60,000 American boys died and the 250,000. Yeah, but we're doing business with them. So shut up. We're getting this too. We're making a lot of money. So shut up. And wait a minute, I thought we were going to get distal commies. We're making a lot of money, okay? I'm against globalization. I believe I want to import the prosciutto from Italy, that fine wine from France. But how about getting the products made that we could get made here?
With the recent drop in precious metals like gold and silver, some investors may engage in profit booking, taking advantage of the price decline. However, looking ahead, gold could reach new highs. How do you view the role of gold in a rapidly changing global economy? And do you agree with Celente's assertion that self-sufficiency is key to economic revival? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.